Welcome to The Sound of Economics, the podcast series by Bruegel, the Brussels-based economic think tank. I'm Giuseppe Porcaro.
I'm Alicia Garcia Herrero.
And today we will talk about China's relations with the Gulf states. This episode is part of Bruegel's focus on global China as seen from Europe, which includes our monthly newsletter, Zonghua Mundus. Link to subscribe is in the show notes. I'm happy to welcome Karen Young from the Columbia University. Karen is a political economist focusing on the Gulf, the broader MENA region, and the intersection of energy, finance, and security. Karen, welcome to The Sound of Economics. How are you?
Thank you, Giuseppe, and thank you, Alicia. It's great to be with you.
Here at The Sound of Economics, we've been dedicating already a few episodes on the impact of the Belt and Road Initiative in different parts of the world. The link to the episode dedicated to the Balkans and Sri Lanka can be found in the show notes as well. And today we are going to look at the Gulf region. Historically speaking, China was the dominant power in the Indian Ocean for a brief period back in the 15th century. But since then, it had little to do with the Middle East. China is a long way from the Gulf. However, in the past decade, there has been a shift that will have far-ranging implications for international trade, business, and politics. According to the IMF, the trade between China and Gulf countries has doubled from approximately 90 billion to 180 billion US dollar between 2010 and 2021. And Saudi Arabia was the biggest recipient of Belt and Road Initiative funding in the first half of 2022, receiving around 5.5 billion US dollars. Karen, you have recently published a book about the economic statecraft of the Gulf Arab states, in which you looked at deploying aid, investment, and development across that region. So you have a good viewpoint to illuminate us about such dynamic of trade and investment and how this has come into place in the past few years. How did exactly happen?
Well, thank you. The book looks at how the Gulf states are also changing their posture, and really in this kind of similar period after the Arab Spring, after 2011, being more activist interventionists with financial tools in a widening sphere of influence. So across the Middle East, North Africa, Horn of Africa, and Pakistan. And we could think about the same period as a period of more Chinese intervention, financial intervention, not just, of course, in the Gulf and the Horn, but looking across the developing world. So there is sort of a synergy there. And there are lots of places where both the Gulf states, and really specifically Saudi, the UAE, and Qatar as the strongest economies in the Gulf, where they and China are working in sort of the same places and have similar interests, whether that's in the Horn of Africa, and that has to do with the kind of strategic location for these kind of thoroughfares, but also from the Gulf and looking at the side of West Asia. So Pakistan is mutually important to both the Gulf Arab states and to China. But this period, is really an economic boom period for the Gulf states themselves. I call it a little bit before that also the magic decade between 2003 and 2014, where they're amassing a lot of oil and gas revenues, and they start to deploy them externally. China's Belt and Road is kind of built up in the same way, in the same period. So we're talking about kind of movement within the global financial system, the interest of states to kind of expand, using financial tools for political ends. That's what we mean by economic statecraft. So it's kind of happening at the same moment. It's also a moment in which China's energy demand really explodes. China is an oil producer, but basically decides that it needs more, and not just from the Gulf. So China's energy needs, the Gulf states are very important sources, but they're not the only sources. And so it's important to keep in mind that the Gulf states really need China as a customer, but China has lots of places to where it can get its oil and gas. And we have certainly seen that, of course, after the Russian invasion of Ukraine, and after sanctions and the price cap, where it's been, very economical to buy oil from other places, specifically Russian oil. So anyway, I mean, the trend line is that these are economic development actors in a kind of changing space, right? So China certainly has had a model that it's been trying to push out into the developing world. And a lot of that model is based on lending through Chinese financial institutions. The Gulf states do it a little bit differently. They're less likely to be lenders and more likely to be sources of aid and investment. And so that's an important distinction as well. So maybe I should pause there and we can dig down a little bit.
Yes, because I would like then zoom in a little bit in some of the aspects that you just mentioned. But before doing that, I would like to ask Alicia if she has a first reaction to this overview that you just gave us.
First of all, thanks, Karen. It's indeed very interesting because I think beyond history, as Giuseppe said, we need to go back very much to find this connection that we have today. But there is a connection related to the economic model. And I think that's what you highlighted. Yeah, I mean, even before China became so important for the Gulf, basically the Gulf was already doing some kind of, state-led economic model, even if not, of course, socialism with Chinese characteristics, but still, in a way, giving the idea of deep state, that is so widely discussed in the Gulf. And I think that's something that we need to realize, that there's a commonality here that is probably, but this probably we'll discuss later. What I wanted to say, though, on your point, on this very general point, is two ideas very quickly. One is the surprise, Russia, meaning Saudi was the first provider of oil, as you know, and it turns out to be the second because of this not nice, but still, comparative, I would say disadvantage given the price, but, basically the consequences of the war on Russia. And that's very important because I think it's in a way pushing Saudi to get closer because it realizes that it's losing that kind of pole position. But the irony also of this is that on the one hand, Russia's forward pushing Saudi towards China. But on the other hand, as I said, when Saudi sees what's happening to Russia, if you look at Vladivostok, if you look at everything Russia is giving away in terms of its influence on Central Asia, wow, you may want to think twice because I think the Gulf has its own, and I want to pre-announce some research we've done with Alessia Migini, looking at networks. You'll be surprised, Karen, to hear that using network analysis, the Gulf is closer to India and basically the Horn and all of that area than to China in terms of trade, believe it or not. It's because it's a mixture of a number of things that will look there. It's not just cross trade. So, why lose that influence and that diversification, if you see what I mean, like rather than just end up like Russia? For me, this is something that might not yet be on the agenda, but might come on the agenda as things become clear in terms of China's overwhelming upper hand in the region. And that's something I wanted to share and of course, have your opinion.
Yeah, I think that's a great point. And there has been tremendous anxiety among leadership in the Gulf Arab states after the imposition of sanctions on Russia, and particularly the targeting of individuals close to the government, because the Gulf states, they don't want to see a price cap. They don't want to be exposed to an action like that. And they don't want to see individual sanctions or the seizure of individuals' assets. And so this is moving in a way, absolutely, that where you see more of a similarity in sort of the economic model, and also, this is what people talk about as swing states or the non-aligned movement. It's really activating a kind of new politics among developing economies. So you don't want to look like Russia, but there's also differences between, kind of Chinese political systems modeling and Gulf states too. And so I'm fascinated to read what you're saying about the network analysis of connections between the Horn and India, because that certainly would be music to the ears of American policymakers who want to absolutely stress that the Gulf India ties and, Gulf Horn and Gulf MENA is more important than Gulf China. So that's going to have some interesting political implications.
I have a question about the other way, not about China's investments into the Gulf, but actually the Gulf investments into China, because we are here not speaking about the same actors as Russia. Again, we're speaking about actors which have quite a lot of capital to invest around the world, and actually the world trend, as far as I understand, in the post-oil preparation kind of economy is to diversify investments and also make investments in other regions of the world. So what is the role of the Gulf states in investing in China?
Yes, I mean, if we look at Gulf sovereign funds, there is a shift underway. And, if you speak to leadership in Mubadala, for example, they will say that they have been underweight in Asia and in China specifically. And so they're working to kind of, change their allocations and orientations eastward. That's also a factor of Europe is not growing. Europe will be in a recession. And traditionally, the sovereign funds, they were heavy into real estate in the US and in Europe, certainly into American securities. That's not going to change. They're going to be very active in, the US equity market and, New York Stock Exchange listed companies. But, there's an opportunity where growth will be, and that is going to be Asia. India, very important in that, of course, as well. So you are going to see some kind of reallocations and shifting. In China specifically, what we're seeing, though, are really more co-investments, often in third countries. So Pakistan, again, being very important. You might see co-investments from Gulf and Chinese companies, particularly in refining and in petrochemical facilities. You might see more collaboration in technology and investment in renewable energy. So especially, the Gulf states, especially Saudi Arabia, they would like to develop their own capacity for deploying solar power within the developing world. So they'll be competing with China in some ways. But in order to get that off the ground and develop their own manufacturing capacities, they do need the technology from China, particularly in solar panels and that kind of manufacturing. That could change over time. If they're able to create their own kind of manufacturing ability, maybe in 10 years, that won't be so. But in the short term, yes, you will see more Gulf investment in those kinds of firms. And certainly during the pandemic, we saw a lot of investment from the Gulf into Chinese firms that were able to deploy in sort of the biotech, some synergies there. Performance, of course, though, of the Chinese vaccine was very disappointing. So again, maybe we're going to see a little bit of a shift. But certainly in those areas, also in military technologies, drone technologies, that's something that the Gulf states are interested in that China can offer.
We mentioned trade, we mentioned investments. We should mention also currencies. Alicia, maybe you can give us a bit of an idea, because currency seems to be a new tool for China to get into other regions and exert their economic influence over there. I've been hearing the word petro-yuan or something like this. Historically speaking, we're very acquainted to the notion of petrodollars back in the 70s. I wonder what exactly is that?
So it's exactly that. So when the countries in the Gulf, were able to amass wealth thanks to, high oil prices in the first two oil crises, 73 and 79, it was mainly dollar. By the way, oil is still mainly traded in dollars. So for that part, it was all dollars they were accumulating, which helped them, go and buy the world or, all of that. Now, the idea is, why not accumulate yuan and use the already existing, by the way, for years already, maybe 2015, if I'm not mistaken, this futures market in RMB in Shanghai, in oil futures market, and just, basically build up that capacity of basically invoicing and even trading in RMB, and then use those RMBs for, who knows, whether, as you said before, buying more stuff in China, whether it's trade, whether it's, investment. We've actually conducted some research on this as well, not yet published, but we're looking at the determinants. To start, most of the use of yuan, this idea of petro yuan, is trade. It's not so much investment. People don't buy stuff with yuan yet. They mostly trade. They buy goods from China. And China, through a number of memorandum of understanding with UAE, for example, is trying to foster. I don't know whether that, maybe Karen knows, this have been probably also in the strategic agreement with Saudi, the use of RMB for trade. It certainly was with Lula, by the way, in the latest trip to Beijing. So the idea is to have more regional RMB trade centers and have more trade. So China, in a way, clearly wins because it's its own currency. Bear in mind that I don't think this is very useful for the Gulf because they are pegged to the dollar. I'm sorry. It's like, why would you accept the exchange risk if you don't need to? Karen, I would love to hear your views.
It's a great question, and it's an interesting kind of topic. It makes everyone a little uneasy when we talk about what's happening with the US dollar as sort of our most important measure of holding wealth and also of exchanging wealth. So the way that ministers in Saudi Arabia or in the Gulf have explained it to me when I've asked is that this is a customer service relationship. If your most important customer comes to you and says, we would like to do a deal and do it in our own currency, you don't say no, but it doesn't mean that you reorient your entire monetary policy to suit them. So what's happening now is that, yes, you are seeing some transactions, particularly in the oil trade, based in RMB. And that's, I think, what will continue for the short term, because, as you say, all of the Gulf states have a restricted monetary policy pegged to the US dollar, Kuwait with a basket of currencies. So, that's where we are now. Interesting, though, another thing that I have heard very recently in Saudi Arabia is that, the peg to the dollar is not necessarily something that Gulf states want to sustain forever. And in fact, a measure for them of their own ability to diversify will be when they can float their own currency, right? So that's interesting. And it kind of speaks to a goal of economic diversification, both away from a dependency on oil revenue, but also in an aspiration of restructuring an economy that has more of an export market to offer. I think we're a long way away from that. But the fact is that the conversation with trade in yuan to China on the oil trade is just one of many other kind of conversations for the Gulf states in the way that they think about their monetary policy and how active and aspirational they are for their ability to produce all kinds of other products in the future. So I think that's something kind of has a lot for us to think about the primacy of the dollar when developing economies and members of the G20, including Saudi Arabia, are thinking about their future, which is distinct from dollar dominance.
That's very interesting, and brings me to the other question which we were flying around, but not really touching yet, which is the political side of all this story. Maybe starting with more diplomatic, traditional diplomacy itself, which has it is playing a role at the moment in relations between China and the Gulf states. We've been seeing that throughout the 2010s, there have been several strategic partnerships sealed between China and those and the states from the regions. 2012, the United Arab Emirates, the Saudi and Iran in 2016. We mentioned the Road and Belt Initiative, which is increasingly perceived as a tool of foreign policy and not just an economic cooperation tool. So how we can summarize the state of affairs in the official political cooperation?
So China's diplomatic footprint across the Middle East, and particularly in the Gulf, is expanding. And so this is something really interesting to watch. Certainly in this most recent brokering of a diplomatic re-engagement between Saudi Arabia and Iran held in Beijing is one big example of that, as is the Shanghai Cooperation Organization and other kind of movements. I would put this into sort of a larger shift in the way that low and middle income countries and developing countries in general are thinking about their positionality in our global system, right? And so there are lots of words for this. Are they swing states? Are they part of some sort of new non-aligned movement? I don't think it's really captured a formation yet, but China is more active, I think, because other countries are interested in kind of exploring what different kinds of partnerships with various big actors look like. So you've got reception, I suppose, to these Chinese overtures. What that actually means, though, in terms of economic cooperation, I think it's really mixed, right? So particularly in the Gulf, I mean, a lot of, strong trade relationship, particularly with the UAE, new investment from China coming in. You mentioned the investment in just this year into Saudi Arabia. But I'd say it's a mix. So look at, the big contract awards in Saudi Arabia on the mega projects, particularly like NEOM. The top 20 project awards in NEOM so far, only 2 of those are to Chinese firms. And so there's a lot of competition there to win awards. And it's not like China just is walking in and taking whatever it wants, right? So there are certain sectors where, there's definitely synergy. There's a lot of new joint ventures. There's this new one announced of Bao Steel, a big Chinese steel company, or the biggest in the world, investing in a JV with the Public Investment Fund, the Saudi sovereign fund, to build a steel plant that will build basically oil platforms and the bottom of big container ships. Those are both things that Saudi Arabia wants to build and make, and things that China needs to, right? So it makes sense for them to be cooperating and co-investing in those kinds of ventures. But then there are disappointments too, right? I think, there's been talks of other potentials, where Sinopec, the Chinese oil company, would like to be a project or be in collaboration with the Saudi oil company Aramco and the gas market, to explore domestic production of gas in Saudi. And that hasn't been as easy to secure because they're more competing in that sense, right? So anyway, the point is that there are, these overtures, which I think are more about a geopolitical moment that we're having, where there's an openness to them. But if you look at actually the transactions and the deals that are happening, it really depends. It depends on the sector. It depends where there's mutual benefit. And there you're going to see where there's more activity.
Alicia, what do you think about that?
I very much agree with Karen that it is not so simple. I would put it that way. When one reads the news, certainly the news I would say, especially in China, but also more generally in the global South, it would look as if China is absolutely dominant, in the Gulf. But when you actually go into the detail, beyond everything Karen has said, which is like they don't get all of the deals, you would be surprised to see that it actually doesn't happen. And this is true even in Southeast Asia. It's not only the Gulf. But, the narrative, though, the narrative is extremely powerful. So there is a disconnect, and we have had this, if you recall, also in Africa, in our podcast, Giuseppe. But there is kind of a disconnect between the narrative and the reality. I'm not saying China is not increasing its influence as it should be, because it's becoming increasingly large. But somehow there is a disconnect between the two. And it would be very interesting to know why this is the case. Is it because Gulf regimes feel less threatened than they would feel, kind of dealing with the US, or all of the expectations that the US may have? Is that the reason? Or is it just the inevitability that China will become, the hegemon, and therefore better be there before others are? Yeah, I'm not sure what's the answer, but I think it's a very important question, both for the Gulf, but also for us all. Yeah, I mean, to gauge why this is happening and the underlying reasons. I would also imagine that because the Gulf, or especially Saudi Arabia, is not in the situation Russia is, meaning it has choices. Russia doesn't. I could imagine that this relation might not be always like linear, that we might not necessarily have, very open discussions about it. And this brings me to the Indian Sea, I mean, the whole idea of regional influence, both India, but also Saudi. Yeah. And this brings me, and I finish here, to Karen's point on Saudi and Iran. I mean, anybody who knows about their relation knows that this is not the last word, by all means. We still have Yemen going on. I mean, I just can't think that this is so easy. So no linear, in my view, I just finished there, no linear trend, in my view, in relations between the Gulf and China should be expected, because they are not in Russia's situation.
Yeah, I think Alicia makes a really great point. I totally agree, right? But the political question is super interesting. Why don't the Gulf states push back more on this image of Chinese dominance across the Middle East, North Africa, Pakistan? Because in many places, the Gulf states themselves are more important economic actors. They're bigger sources of foreign direct investment in recipient states, bigger sources of job creation. And I guess that's because it's not worth upsetting the customer. There's a usefulness to it. It's fascinating in that pace of change, and totally agree on the Chinese brokering of an agreement between Saudi Arabia and Iran. They haven't even reopened the embassies on the schedule that they plan to. That's all been delayed. It's not a peace deal, but letting China have a little bit of a win, right? Sure, why not? Where can China help? And it's sort of like having a powerful friend that you can call once in a while, but they're not necessarily super reliable, or you don't know them that well. Maybe that's what's happening. But yes, something that is nonlinear in its scope, and also how we began this conversation. It is still very new. So the United States and Saudi Arabia have a relationship that goes back 70 years. We know each other very, very well. We know all of our warts and problems. The relationship with China it's not that China is unfamiliar, but the Gulf states and their approach certainly to communism and socialism was in opposition. There was not a diplomatic presence of the Soviet Union or good relations in the Gulf until after 1990. And so China is a little bit of the same. There's a bit of, this is a new kind of relationship, right? So let's see where it goes. But I think there will be areas of competition, particularly as we think about the renewable energy sector and what the Gulf ambitions are and what China's ambitions are, and the track record, frankly, of China as a development actor in Africa, but in the Middle East too, is not necessarily very strong. And the Gulf states think they can do better. So they will, get some confidence building exercises, I assume, to come.
Karen, obviously we are in Brussels at Bruegel, and we try to see a little bit what's the role of Europe in all this. And recently we've been seeing in the past few months that relations with the Gulf states have been key on one hand because of the energy crisis and diversification from the Russian gas, but also a challenge to the values of the EU. We've been seeing what has been going on with the World Cup and also some corruption scandals here at the European Parliament. So how to districate such relation in this highly complex environment where China plays an increased role as well in this kind of things?
Oh, well, it's tough to ask an American to comment on European politics, but I'll try.
Well, that's why actually I'm asking you, because you can see it from far away. Then Alicia can say a few words about how do we see it here domestically.
Yeah, I think in the US we are having similar conversations, right? And when the Biden administration came in, it was with the idea to promote a values-based foreign policy. And that has been a tension point with European governments in the Gulf as well. And I think essentially it's failed. With the Russian invasion of Ukraine, the idea is that you want these oil and gas producers close to you, and you're willing to make concessions on what you thought was most important about your foreign policy, that it would be based on human rights and a shared value system. That's no longer something that seems very viable. And if you look at the Gulf posturing and new investments into the Eastern Mediterranean gas business, this becomes very, very clear. European governments and Gulf and Israeli government as well are cooperating in ways that I think no one really could have expected. Because now it's simple. You have something and you see an opportunity that Europe wants, they'll be willing to pay. It's a business opportunity. It's like very, very straightforward. From the Gulf, anything that can be a transactional sort of diplomacy is something they can do quite well. And you're seeing policies coalesce around those ideas. So, the same thing, it just happened a day or so ago that Canada has kind of ended its opposition and outburst and outcry over Saudi human rights abuses. Everything's fine now, right? And the Gulf states themselves are making policy choices to, re-engage Syria and enter Syria into the Arab League. So what does this mean for the region itself and how others and from the outside engage with the region? We're just not talking about human rights issues value anymore. We're getting very, very practical. And so for many people, this is quite difficult. and is a huge disappointment. And for others who, I suppose, have more of a realist lens, this is the age of energy security and energy crisis. And so this is a natural sort of outcome of those politics. And it creates, of course, an opportunity of leverage for these producers.
Alicia, would you like to give your more domestic view on that?
I just want to say, Karen, that, we all need to become pragmatic. What you just said is an important lesson for Europe. Not that I don't care or mind about human rights or anything like that, but we need to make ourselves heard rather than just be loud but not being heard. You see what I mean? We need to find that balance. And I think realizing that statecraft is so powerful, because this is what this conversation is about, in my view. Chinese statecraft in the Gulf in different ways. But, we need to do our own type of statecraft without falling into the trap of course, forgetting everything we are there for. But I think your words are, I hope they are, like up there for our podcast that everybody can hear, because it is a very important thing we need to do, indeed. So thanks for that.
And I would like to join Alicia saying thank you, Karen, because unfortunately that's all the time we have for this episode. And I would like to remind all our listeners that, as usual, they can read in open access all the analysis by our scholars on our website, www.bruegel.org. Alicia, Karen, thanks a lot for joining this conversation.
It's been a pleasure. Thank you so much.
I just want to thank also all our listeners for following us, and until next time, bye-bye.